Hello everyone, welcome back to this week's Technical Insights. Global equity markets wrap up last week, defined by a rotation out of this year's mega tech winners in favor of smaller cap stocks. Friday marked another day of decline across the board, with even the Russell 2000 down 0.63%. While a shift towards stocks viewed as a bigger beneficiary of interest rate cuts still appears to be the theme for the week, and the stock market is experiencing an overdue rotation. Investors are taking money out of big tech stocks, which have performed so well this year, and moving that money into other areas of the markets, including the bond markets, where interest rate goes down, bond prices usually tends to go up. This is because the existing bonds with fixed interest rate becomes more attractive compared to new bonds offering lower interest rate in a falling rate environment. Before we go further, let's have a quick look at how global markets have ended last Friday. Our Singapore Straits Times Index closed lower on Friday, down 24 points or 0.68%. In Asia, Hong Kong Hang Seng Index fell 360 points or 2.03%, while the Japan Nikkei 225 Index dropped 0.16%. In US, the Dow Jones Index was the worst performer on Friday, falling by 377 points or 0.93%, retreating from the all-time high we saw on Thursday at 41,376 points. The S&P 500 dropped 39 points or 0.71%, with the all-time high seen on Tuesday at 5,669 points. The Nasdaq Composite Index lost 144 points or 0.81% as the rotation out of mega tech stock continued into the second week. Technology company CrowdStrike tumbled 11.1% on Friday, following a major technology outage that impacted business around the world, including airlines and some financial institutions. On the weekly view, the Dow Jones Index was the outperformer, rising 286 points or 0.72% to finish above the 40,000 handle at 40,287 points. The S&P 500 Index lost 110 points or 1.97% for the period to 5,505 points, recording its biggest weekly loss since April of this year. Tech-heavy Nasdaq Composite Index tumbled 671 points for the week or 3.65% to 17,726 points, losing the 18,000 handle as the tech rally continued to broaden out to the rest of the sectors. The small cap Russell 2000 Index climbed 1.68% for the week, following a 6% jump last week. And most analysts are still positive on the economy and the market as inflation improved and earnings broaden out going into the earnings season. So resist the temptation to overreact and stay focused on the areas of thematic recovery momentum that are likely to carry through to the end of the year and into 2025. In Asia, Hong Kong Hang Seng Index lost 875 points or 4.79% for the week to close at 17,417 points. The Hang Seng Tech Index dropped 245 points or 6.49% to 3,536 points. China's 4-day session, known as the Third Plenum, failed to make any major announcement aimed at promoting economic growth. Many investors will now be looking to the Politburo meeting at the end of the month for specific policy announcement. Week to date, our STI index dropped 50 points or 1.44% to finish at 3,447 points. The broad sell-off led our benchmark index to its first weekly loss since the middle of June. Among the STI constituents, only 3 ended the day in positive territory. ThaiBev was the top performer, ending at 1% or 50.5 cents. Conglomerate ST Engineering closed 0.91% higher at $4.45, and SGX closed up 0.4% to $9.77. So let's move to the charts to analyze if any of these counters rally are likely to continue in the next few weeks. First, let's look at ThaiBev. Last Thursday, ThaiBev announced a proposal to a share swap with TCC Assets. In the proposal, ThaiBev will transfer its 28.78% stake in Fraser Property in exchange for a 41.3% stake in FNN. ThaiBev will cease to hold any stake in Fraser Property after the share swap, and its stakes in FNN will rise from 28.31% to 69.61%. Approval from independent ThaiBev shareholder by a simple majority at an EGM will be required. After the announcement, ThaiBev share price rose 1% on Thursday and another 1% on Friday to 50.5 cents. For the week, ThaiBev share price rose about 4% and the shares were up about 20% since the year-to-date low on 3rd of July at 42.5 cents. Since the peak of last year's share price at 67 cents, ThaiBev share price has been on a downtrend with the year-to-date high seen at the beginning of this year at 53 cents level. The recent rebound at the beginning of the month has pushed the share price up above the red color line, which is the 200-day moving average, now at the 49 cents level, and this is a long-term positive signal. The support can be found at a recent double bottom in April at around the 47 cents level, which also coincides with the 20-day moving average right now. The first resistance can be found at the recent high in June, which is the level over here at 52 cents, with the year-to-date high close by at the 53 cents level. On the indicators, the MACD is showing very strong positive momentum, with the MACD line diverging away from the signal line upwards. On the RSI, the latest reading at 69 is close to breaching the 70-point overbought mark, indicating that we may see a reversal soon. So with both indicators sending contradicting signals, investors will need to exercise caution when chasing the rally that we see in ThaiBev right now. A more conservative approach would be to wait for a pullback towards the recent double bottom that you see in April here at the level of 47 cents before considering a long position back to target the year-to-date high at the 53 cents level. Next, let's take a look at ST Engineering. ST Engineering share price has been on an uptrend in the past 2 years. The recent low of the share price in June over here at $3.98 was actually the high that we observed in October last year, which had a change in polarity to become a new support level. ST Engineering has rose about 12% since the low of June this year. Year-to-date low was seen in February at $3.58, and the share price hit a year-to-date high last Friday at $4.48 before closing at $4.45. The recent high in May at $4.26 could have a change in polarity to provide support for ST Engineering share price, with the 20-day moving average closed by at $4.31. The upper bound of the Bollinger Band will likely be the key resistance level for ST Engineering at $4.49. On the indicators, the MACD is showing that the uptrend momentum is slowing since the low that we saw in June at $3.98, as the MACD line is starting to converge towards the signal line. On the RSI, the latest reading at the 70-point mark is testing the 70-point overbought level, indicating that we may see a reversal soon. So with both indicators signaling a possible correction, investors should wait for a pullback at least towards the recent high in May at $4.22 before considering a long position targeting the year-to-date high again at $4.48. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market developments. And I'll see you again next week in the next Technical Insights.